Myself Vaibhav. In today's session of Visual JForex, I will make you familiar with the indicator named Relative Momentum Index. This is a momentum indicator which can be utilized to design the automated trading setup on the Visual JForex platform. So here we will see the functioning and the utility of this indicator and how we can deploy these indicator block to our advantage to figure out if there are any possible strategies which can be built using this indicator to run on our live accounts on the JForex platform. So here this is the relative momentum index and it's part of the momentum series. Here we don't really have much of a description given, so we will straight away head to the Visual JForex board developed by Dukascopy Bank SA. Here we will add the indicator RMI. Here it comes. As I have said in prior sessions as well, the start point can be any of these three start points depending on your requirements. Now coming to these indicators, input parameters, and then depending on the input parameters, we will be getting the output value which can be used further down the line to determine or to define the conditions which will need to be fulfilled for any trade execution to take place. So here first thing we have to define is the default instrument on which currency instrument or the commodity instrument or even the stock indices or even the equity indices. So all these different categories of financial products can be taken into consideration to design the automated setup to trade on the Visual JForex platform. But in case of the indices and other CFD instruments, we have to design the setup as per those instruments, but while exporting the file, we have to keep the currency instrument only, and after exporting it and then importing it back on the JForex platform, we can change the default instrument. So that is one thing which needs to be kept in mind. Apart from that, the all the instruments are supported for development time period, and these other variable will need to be defined after we are going to observe and see what are the possible scenarios, what are the possible permutation combinations which can be profitable for our system. So here these parameters we will first observe on how this indicator works on the chart. So we will add this indicator RMI, relative momentum index. As you might have noticed from its similarity with the name of other indicator RSI, this is you can say a bit improvement on the RSI. It was brought to the market in 1993, and the basic difference is that in case of the RSI, when we try to define the RSI, we take into consideration the change in prices, the upward change, and we divide that by the lower values, the change in downward prices. So we take the difference between the highs and we take the difference between the lows, and we take the result out, and we use that as RSI. The only difference coming to the RMI is that instead of taking a single day's price difference, we take the average price difference, and we can define that second parameters. It can be anything starting from 1. So suppose for example, if we take the 5 days average change of the prices, the low prices and the high prices, and then we take the ratio, that is going to be the RMI. And of course, since this is dependent on the average pricing, we have it a lot more smoother compared to the RSI. Here for example, I will add the RSI indicator also on the chart, and if we take the second parameter of RMI as 1, then we will have both the values RSI and RMI being equivalent to each other. So here let us change this. I'm doing this to show you the similarity and where the difference crops up, so you can compare these values. RSI is basically RMI defined for the same time period using the average change at 1. If we take the average change to be different, then we will have the different values for the RMI. Apart from that, there is not much of a difference. So here it's all about the averaging out the change in the prices. And if you want to go into the details of the formula, how it is calculated, you will have to do bit search on yourself. We will not go into the calculations. We are more concerned with how we can utilize this indicator to our advantage on the Visual JForex platform. So that's why I'm skipping that part. Now just compare these values side by side and you will observe the identical nature of the output values. Now coming back to the RSI, the RMI. Here, let us change these parameters. We will take default value, we will change it to say, for example, 20, and price change, we will average it out over 5 days. So here we have this kind of outcome now for the Euro USD defined for last 20 candlesticks of 1 hour each. So we have the data for last 20 hours and the price change is being averaged on the last 5 hours. So here, and given the fact that this is a momentum indicator, as you might be already aware, most of the momentum indicator works with the flow of the trend, and we can also use this indicator to determine the overbought and oversold condition. So here, the value anything above 70 is considered as overbought, and if the RMI value drops below 30, it is considered as oversold. And also, whenever we see the turnaround happening, if the value after entering into the oversold or overbought scenario also starts to shift the momentum and takes the turn. Suppose, for example, if the RMI value after having been dropped below 30 again starts to rise, then it can also be considered as the indication of possible retracement taking place. So you can trade it that way also. One way to trade is that we go with the flow, and if we see that momentum is gaining strength and the underlying instrument is entering into the overbought scenario just for the first time, so whenever we see the crossover happening for the RMI, if the value crosses above 70 from below 70, even that can be taken as the trade initiation point. And similarly for the sell trade, whenever value drops below 30, uh, after having stayed above 30 for considerable time, we can take that as a kind of marker that the price pressure is on the lower side, and this is the time to get involved for the fresh short sell trade. So we can trade it that way also. So basically you have to observe, you have to see what is the kind of time frame which is going to give you the upper hand while getting the entry and the exit side. So you are looking at this chart to figure out what is the possible combination. And I would say that of course you will have to do lot of studies in figuring out these input parameters and then design the system accordingly. But the basic point is that you have the flexibility of choosing these various input parameters, and depending on your requirement or depending on your observations, you can see what is likely to prove profitable and then define these parameters accordingly. For example, here we can change the time period of the underlying instrument starting from 10 seconds to a month. So here we have these all the in between parameters defined. For example, we can take it 15 minutes. Shift is the look back period. If we take shift at 0, then we will have the current output value being taken into consideration. If we want to go back in time, then shift can be changed to say 3, 4, or whatever look back period you want to go back in time and take that output value, all you have to do is put that value here. The time period is the calculation time for which the RMI is going to be calculated. So if here we are looking at the 14 candlesticks of Euro USD of 15 minutes each, then we will have this output. If we change this parameter, the time period parameter, then depending on the time period we are entering in, we will have the RMI values for that particular time period. So here we can change this. Momentum period is the averaging period for the price change. So for price fluctuations, the difference between the high prices and also the similar difference between the low prices, the current high compared to the prior highs, and then averaging out that change over given period of time. So here we can carry that out and we can define these input parameters. For example, we can make it 3, and what will happen is that 3 candlesticks of 15 minutes each will be taken into consideration, and the change in prices will be compared, and then depending on that values, the RMI will be calculated for last 20 candlesticks of 15 each. And here we will have the output value. Given the fact that shift is 0, we will be having the current output value for this RMI block defined with these 5 input parameters. Now coming to the settings part, here we can make some changes on which side you want the output value for the RMI to be calculated, whether on the bid side or on the ask side. You can simply change this, and then coming to the applied price, when we are looking at the RMI, if you want to take into consideration between the close price or say high price, so here basically for calculating purposes we will see that different output are generated depending on what side of price change we are taking in. Suppose if we are using in close price, then we will have the output value for this indicator block which will be different in case we were to use suppose the price difference of high prices. So that's how it works, and let us try this small experiment on the chart. So here if I change it to say open price, please observe this output for RMI, we will see that value has changed. If we say high price, again the RMI value has changed. Low price, again you will see the RMI value has changed. So here these input parameters can be defined whichever way you deem fit, and always the requirement is that this setup should be profitable enough. And to see if it is profitable or not, all you can do is test it extensively for long period of time, and then see how it performs. And I think that's the only way you can figure out if you are going to be in position to design the profitable setup using these RMI indicators. So that's it from my side for today's session. I will be back tomorrow with another momentum indicator. Till then, have a fabulous day ahead. See you tomorrow. Goodbye.